Hello everybody, John Novak with Nexgen Software. It is May 30th and wanted to do a quick review. Again, go into the website, the education page, and inside the trading plan page 2, we have all of the absolutely best looks that you can possibly do for doing trend trades. And really what I want to do is, talk about the same things we talked about yesterday. What's going to be the best looks on the big chart for doing trades? When are we going to stop doing trend trades? And then when can we start doing trend trades again? And again, the whole process, obviously takes a little bit of time, but as we work our way through the day, you'll see. I just left really the stuff that we put on in class live today and the stuff that we went through. Going back to midnight, you can see it, this magenta line. We started with Fibonacci support, yellow 1-to-1 dots, and a really big gap back to our synthetic triggers. Just means the market's going to go up. Fib's going to hold, triggers are going to roll. We're either going to look for long trades. We kind of hit, a prior divergence pivot, so it started off a little slow, and then eventually we made it up to resistance. The triggers went above resistance, below resistance. We ended up with a trend trade long look on our big chart. And again, as we work our way up, not the best trade going long here. A little better here as all of the trigger lines were going up really strong. A much, and I even put on here, this is what we talk about in class. Ultra strong going up for sure looks. And that's what we really want to start doing trend trades. Then we had a pretty big retracement, and the retracement was divergence on all of our charts. So let's just, let's kind of go through and look at this together, and you'll see. The looks that we really want are really strong triggers. And we want green backgrounds on our big chart. And we don't want any fibs or divergences in our way. And that's really our easiest trades. We've got a couple others that we do. And again, one of the biggest things I think for anybody is, when the trades are perfect and they look like this, it's really easy to do trend trade longs when everything's green and everything's going up. And that's really what we want. The hard part for most people is recognizing when it's time to stop. When you have divergences on all of your charts, or you get to multiple time frame fibs, or, again, like we had this morning, price touching 14.2 support and a big gap back to the triggers. So again, let's just take a look at it. Again, big gap back to the triggers, market went up. And again, we can kind of go to our 5-1 chart, and since it's pre-March, since we kind of did all this in class, we can go back and look at the day. So here's where midnight came in, and you can see we had support, and we put that white box there. So again, no more short trades. However, you can see what happened. We hit multiple time frame resistance here. So no long trades, and then we hit resistance again with pivot stop outs, and then, this is all the way through about 4 o'clock in the morning. And then finally, we kind of cleared the way. And you can see the triggers all broke above resistance in this white box that we had drawn in where, we stopped doing anything. And we got one opportunity for long trades. Again, this is early morning, 4:15 in the morning. You may or may not be up that early. And, you can see we made it to, let me just copy this box here so it'll be white. We made it to multiple time frame resistance. And again, this is where, early morning, you're not really going to go long into resistance. And then we had this divergence on all of our charts, which was going to get us down a little bit lower. As we traded lower, we're talking about 7 o'clock this morning. I want you to look at the 14.2 chart. This was the trend trade long look that we had on our 14.2 chart. And again, dark green mid bands, fib to fib oscillator. Again, not the highest probability look. because our synthetic triggers were kind of sideways. But I do want you to see that spot on our smaller chart. And this is one that, is really, really, really good for what we do. It's a pivot stop out just by a tick, and it's at the edge of multiple time frame support on a little chart. So again, keep in mind, trend trade rules true on the 14-2 chart. So if you're ever going to trade at the edges against the color on the 5-1 chart, this is what you're looking for. Lots of fibs, divergence, pivot stop outs, and then you can really take advantage of that. And again, let me go back to the plan. You'll see we have two of those. And I call them medium probability trades. They're really not, if you get multiple time frame fibs on the little chart and a divergence pivot stop out, as a matter of fact, this one is actually exactly that. Trend trade long on the big chart, multiple divergence pivot stop outs on the little chart. It's magic. I mean, it just really does really good things all the time. So you can see, obviously, if you were up a little earlier, you had an opportunity for one long trade. And, again, we had this one marked, but, again, this one's probably lower potential because of the divergence pivot stop out. And you'll see we start working our way towards really strong triggers to the upside. And again, another trend trade long. And then we had divergence on all of our charts again. And again, I just want you to see the effect of divergence on all of our charts. And again, this is where it is in the plan. If you have divergence on all of our charts, especially with Fibonacci, stop your trend trades. So let me show you what it looks like. Divergence, 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 divergence. And especially at Fibonacci resistance, just means on your big chart you're going to make a deeper retracement usually and get a trend trade. So this is the stop trading. And again, I'll just take my word for it. We had divergence on all three charts and from Fibonacci resistance, which means we're going to make a down move. And again, this is where some people will mess up and try a trend trade long, and it almost always loses. So that's why we have it in our rules to not do it. And again, it held true again today. So look what happened. This is where we had the triple divergence. This is the one on the big chart. And we also had it on our range chart too. Plus the triggers pinch, so we're going to make a deeper retracement, which is very natural. I mean, it doesn't go straight up forever. Now, we anticipated that we're going to make it down to these blue lines of support. Basically get a trend trade long look on our big chart. Now, again, look, this is what we wrote in class. We hit multiple blue lines of Fibonacci support, but the triggers rolled, kind of strong through it. So what we wanted to see, especially with our synthetic triggers way up here, is we want to see the triggers roll back up. Right, so let me just draw a little yellow line on there, just so you can kind of have a reference point when you go to the small chart. Again, you shouldn't even look at the small chart until the large chart has the right look, so you don't get confused. Look what happened. So our triggers cross up, the background color turns green, and we end up with, this is some of the discussion we had in class. What happened? Where did it happen from? And we got our first trend trade long rules met right here. And essentially, this was mid bands and fibs and our fib to fib oscillator at the 25 buy line for our rules to be met. And you can see, obviously, it went up. Again, once we got up here, we had, and again, let me slide this over for reference here. We'll go back to our big chart. We had, this look on our trigger lines where this yellow line is. And again, this is the look. I mean, we wrote it again in class. Ultra strong going up for sure. I mean, that's what we want. Really high probability looks where we can say, hey, these triggers, because they're so strong going to the upside, our trend trade longs are going to work. So when we go to our small chart and we get presented with our trend trade long rules, which you can see at Fibonacci support and our indicators, we have the opportunity to make some more money to the upside. As this progressed, again, we got to the point right here where we were above one of these prior divergence high lines. And again, that's when we stopped doing trades until what? Well, we wrote it in class. Let me see if it's on here. There we go. This, I'm kind of giving away the rest of the day. You can kind of see, but what we look for is for that line to break. And again, the first clue that any line is going to break, support or divergence, is ultra strong trigger lines. And you can see once the divergence line, and we had a big lesson on this in class, once it stops plotting right there, so you can see we closed above it, trend's going to continue. So again, what we wrote in class was once the low of the bar closes above this divergence line, we won't do any more longs until it does stop plotting, then we can use it again. And again, let me give you a reference yellow line to kind of work forward with. Let's take a look at our smaller chart, and you'll see what happened. We obviously broke above it very significantly. And lo and behold, another trend trade long. Mid-bands and fibs. And basically, that one really took off to the upside. So that was quite a big opportunity right there. And again, we got ourselves into a situation now where this was our next long trade. And, again, this is like the epitome of all things perfect for us. Breaking our Fibonacci target for the first time, right? So obviously this strong move up, and this is like the mother lode of all things good for us. Fibonacci support, trigger lines strong above strong synthetic triggers, and we're doing long trades. So here, I'm going to give you a little yellow line for reference so you can kind of see where that happened. And we'll just bring it over, and you'll see, well, there's two. So there's one there, and then broke again, and we've got basically it's trend trade longs and trend trade longs and trend trade longs. There's a lot of trend trade longs. And, eventually we got to, this was the last one that people took. And we got to this spot right here. And, it's as easy to see as the day is long. It's multiple red lines, multiple divergences, and what we write in a situation like this, which we did in class, is double fibs with double divergence pivot stop outs. And this is the look on the small chart that will kill the trend and make the 14-2 chart go back to some, lower areas. So we were either waiting for one of two things, for it to get back to some, trend trade long areas on the big chart, or break out. Well, the market was strong. So we didn't have any trades in here. This was not what we're looking for high probability trades. But guess what? Once it does break out, which we had in here, we get the opportunity for more long trades. And again, once we have more long trades, there's a point at which, all good things come to an end. So for us, and, quite simply, let me just bring this in here. You can see, this is pretty much textbook right here for what we do. So you can see strong triggers up, trend trade long, trend trade long, trend trade long. Pretty much just keep taking them until we reach resistance. And, again, once we get to resistance and we have divergence and the trigger lines roll over and they're still down, so we'll probably just got another trend trade short, then we can start taking our first short trades. And obviously a whole bunch of long trades, but again, one of the more important things that we get in our lives is what? Divergence from Fibonacci areas, and that tells us to stop taking trend trades. Which it just so happens that divergence and fibs on a big chart And the triggers rolling over is one of the trades that we do. So take a look at this. So not only do we get, well, let me see. Let me get the other one of those. Bear with me. Yeah, it's the same thing every time. Divergence, fibs, pivot stop outs, triggers roll over, we get a long. I'll show you just, you can see a couple of them. Divergence, pivot stop outs, triggers roll over, we get a short. So here's the real world. Okay. Divergence at fibs, not too difficult to see. There's no trade here for us, but it is a don't take another trade. And then if the triggers roll down really strong, we can go to our smaller chart. I'll pull that line over here a little bit. And we can see if on our smaller chart it generates trend trade shorts for us. And lo and behold, trend trade short rules. And again, trend trade short rules or triggers rolling, you know, when you go through the trend trade videos, no divergence prior, and pull back into fibs, 1-to-1s, triggers going down, and we get a short trade. You know, again, not real long lived, made it just a couple ticks from support with divergence, which usually ends up ending a trend. And that's it, one easy short trade. And again, you know, this is, you know, something that, I mean, when we go through, let me see, I might even have a couple, you know, clients from our class. They're taking long trades, yeah, these are posts from our clients, but long trades taking profit, long trades taking profit. And they basically did it all day long. And, you know, pretty much everybody was long, taking profit, long, just following the trend trade rules all the way up. So what we want you to do, again, hopefully this is as easy as it gets. If you have one of these high probability looks, take trend trade longs or shorts. If you get one of these looks that says you have to wait until either an area breaks or the market reverses, study these areas. And then I put in yesterday's review for you guys to study as well. I'll put in today's as well, so you'll have a couple of days of study. And then you start working your way through introduction into our indicators, reading the fibs and trigger lines, trend trade rules. How are you going to do an exact entry using our automated entry? How are you going to manage the trade? Very, very important video. It's a longer video, but it's very, very important. So again, your job is to learn the high probability looks and really just focus in on the high probability looks. If you focus in on that and what looks are going to kill the market and make it go the other way, or at least force it to break an area, this is going to keep you out of most of your trouble. And then obviously all the particulars down here in the study, and you know, we'll have you doing these same trades that all of our clients are doing as well. So anyway, have a great day. It's been really fun today. Look forward to seeing everybody in class tomorrow. If for some reason you haven't yet filled out a demo or got your demo started, just give us a call. Hit the contact us list. You know who your salesperson is. Just give your salesperson a call, whether it's Mark, Chris, Jim, Cameron. Give us a call, shoot us an email, let us know, and we'll get you set up and get you started with the software so you can start learning this as well. Everybody have a great afternoon and look forward to seeing everybody in class tomorrow.